Matic is an ERC20 token native to Polygon, which is a Layer 2 scaling solution. Polygon combines a protocol and a framework for building blockchain networks, which are fully compatible with Ethereum and connected to its mainnet. Polygon was launched in 2017 and moved to its own network in 2019. The project is backed by some big names like Binance and Coinbase. The preferred platform for blockchain development is Ethereum. However, it has some limitations. It's slow, expensive, and not customizable. Polygon helps avoid these issues by using proof-of-stake consensus protocol and a modified plasma framework, which supports a system of blockchains connected to the Ethereum chain. This solution allows processing more than 65,000 transactions per second with block confirmation times of less than 2 seconds. There are plans to deploy other scaling solutions in addition to Plasma, like optimistic rollups, ZK rollups, sidechains, and others. Polygon provides this framework for developers who want to scale their dApps together with the tools to easily build their own chain templates, support for Solidity, Viper languages, Ethereum libraries, consensus mechanism implementation solutions, etc. The resulting chains are compatible with each other, as well as with the main Ethereum chain. The transactions within the Polygon ecosystem are paid in Matic tokens, which is also used for payment services and transaction fees. Polygon was set up to address such issues. The Ethereum-based project seeks to effectively join the dots between other projects on the network, creating a framework that will allow developers to easily create new blockchains that will be able to integrate with existing Ethereum ecosystems. Effectively, Polygon seeks to fix the Ethereum scalability by offloading some of the work from the base layer to additional layers linked to its protocol, thus taking the load of the main network. Consider that Ethereum is capable of processing around 2.5 transactions per second. Layer 2 scaling facilitated by Polygon could potentially allow thousands of transactions to be completed in the same amount of time. Given the growing popularity of DeFi, it would appear that there is the need for scalability solutions, and Polygon has certainly generated a lot of interest. But does it present a good investment opportunity? In the following guide, we'll consider the project's potential over the next 5 to 10 years. Ethereum 2.0. Any Ethereum enthusiasts might already be wondering why a scaling solution will be needed once Ethereum completes its much-hyped infrastructure upgrade. The answer is simple: scalability. Whilst Ethereum 2.0 may well boost the platform's block creation time and go some way to lowering fees, the emergence of DeFi means that Ethereum users could grow exponentially, which will eventually slow down Ethereum once again, regardless of its upgrade. Polygon is a long-term solution that will effectively prevent this from happening. Whereas the sharding technique will massively improve Ethereum's speed, it's plausible that the network will eventually be called upon to process hundreds of thousands, even millions, of transactions per second. And this is why it will still require Layer 2 solutions. So what is Matic? Matic is the utility token used on the Polygon network. It effectively has 3 uses. Firstly, it is used as part of the proof-of-stake mechanism for use inside chains on the network. It also facilitates a separate staking mechanism for projects that improve the Polygon ecosystem. This is effectively a way to incentivize developers to create dApps needed to enhance the network. This mechanism is funded by reserving a percentage of the Polygon transaction fees in protocol, which can then be paid out to developers contributing to the Polygon infrastructure. Finally, Matic can also be used to pay fees on the Polygon network. When it comes to tokenomics, there are currently around 6.3 billion Matic tokens in circulation, with more released on a month-by-month basis. The total supply is capped at 10 billion. Check out what top 10 DeFi cryptocurrencies to invest in. Looking at Polygon's price history, Polygon's Matic barely made an impact when it was first listed across major exchanges. In fact, the token was valued at less than a cent for its first few months of trading and remained below 2 cents until January of 2021, where it was swept up in the market-wide upswing. Since then, however, Matic has garnered a huge amount of attention, which has been reflected in some impressive price movement. By March, the token was trading at 41 cents, which marked a price increase of over 33%. Interest in what the project could do for the Ethereum project began to grow, and it wasn't long before Matic was on the move again. May saw Polygon reach its all-time high of $2.62, which might not sound like a huge number, but considering it started the year trading at around 1 cent, most investors would agree that Matic had yielded some pretty impressive returns. Since May, the crypto market has cooled somewhat and Matic's value has dropped to $1.11. However, declining prices have been seen by most leading tokens, and it seems that Polygon is a long way away from sinking back to its pre-2021 price. What's next? Polygon price predictions for 2025. So, Polygon certainly has a great deal of potential, but as we have seen, this doesn't always equate to being a good investment opportunity. To get an idea of what's expected of Matic's value, we need to turn to a few leading crypto analysts. For example, looking ahead to 2025, Digital Coin Price has Polygon going from strength to strength. It predicts that Matic will regain the $2 in early 2022 and continue to gain ground over the next couple of years. By 2025, the platform expects Polygon to be worth upwards of $3.75, before price growth cools slightly at the end of the year. Elsewhere, Wallet Investor is far more bullish. According to its technical analysis, Polygon Matic could reach as high as $4.84 by the end of 2021. The upward trajectory is then expected to continue in the coming years, with Polygon reaching the $10 mark in early 2023 and then closing in on $22 a couple of years later. Of course, these predictions are highly subjective and should not be used as the sole motivation for investment in Polygon. However, they certainly paint a positive picture of what we can expect in the coming years. Looking further ahead, Polygon price predictions for 2030. If we think about just how much has happened in the world of blockchain over the last year or so, with the emergence of NFTs and the surging popularity of DeFi, it should be fairly obvious that long-term crypto price predictions are hugely speculative and cannot be considered as any more than guesswork. However, they are a good way of building an idea of current market sentiment. It has the token comfortably exceeding $3 throughout 2026 before going past $4.50 in 2028. In theory, by 2030 Polygon could well be trading at over $5 per token. Meanwhile, Coin Price Forecast has put forward a similar Polygon price prediction for 2030. According to its technical analysis, Matic will actually break the $5 mark in 2027 before continuing its upward trend, seeing growth of some 430% by 2030 and trading at approximately $5.77 per token. A cryptocurrency research firm by the name of Crypto Research Report is calling for Polygon to reach $5 by 2025 and $12 by 2030. Once again, whilst these price predictions are fairly believable, they should not be the basis for any investment strategy. Conclusion: should you invest in Polygon? Polygon was developed to solve a problem inherent within the Ethereum blockchain. As such, there can be little argument that the project has genuine value in a real-world use case.